Hello, everyone. I'm Matt Clark, research analyst for Money and Markets with your weekly marijuana market update. Now, before I start, after you watch this video, make sure you head over to moneyandmarkets.com and sign up for our free daily e-letter. From Sunday to Saturday, you get a free e-letter that contains safe and profitable information for your investments. You get it from myself. You'll get it from Green Zone Fortune's co-editor Charles Sizemore, our chief investment strategist Adam Odell, plus many, many others. So make sure you go to moneyandmarkets.com and sign up to get safe and profitable investment information for you for free every single day. Now, I've asked about your feedback on how your cannabis investments have been doing. And so far, again, the results have been outstanding, whether it be via email at feedback@moneyandmarkets.com or on our YouTube channel. Either way, we're getting a ton of feedback, and I love it. Keep those emails coming and those comments coming. I love to read what you have to say. Now, today, I'm going to start with a question from Dieter, who's all the way from Switzerland, my family's roots, who emailed me at feedback@moneyandmarkets.com, and here's what he said. He said, I've been following you for a couple of weeks, and I'm thrilled about your very valuable recommendations on different U.S. companies around the cannabis market. Thank you so much. Still, I'm wondering why you haven't stressed on Tilray Incorporated. Their shares have incredibly jumped over the past few weeks. What's your assessment on this? Best regards from Switzerland, Dieter. Well, first off, Dieter, thank you so much for your comments. I always appreciate it when I get comments, especially from abroad, Switzerland. That's a nice reach. I love that. My family traces its heritage back to Switzerland, so I love that. But your email also kind of corresponds with William's comments on our YouTube channel recently. He said, Tilray and Aphria merger with an exclamation point. They are the king of cannabis. They're doing a partnership with Budweiser. They own Sweetwater Brewery, and they have major contracts in Europe for medical marijuana. Finally, John, in an email, asked me, hey, Matt, love the videos. Great information, but I'm curious why you haven't added Tilray to your watch list on Money and Markets. Love to hear what you think. John. Now, again, I appreciate all the comments. I appreciate all the questions, and I'm going to get right into that. And after we're done, I'm going to wrap up and talk to you about the cannabis watch list and kind of where things are with that. But first, Tilray Incorporated trades on the Nasdaq under TLRY. Now, back in December, Tilray and Aphria Incorporated, trades on the Nasdaq as APHA, announced a merger where the pro forma company is going to have an intended revenue of around $685 million. Now, according to some figures, Aphria is overpaying for Tilray by about 9%, which isn't necessarily bad. At the time, the estimates were a little high, but that's only because we didn't necessarily have the full picture of the fourth quarter where we could count the shares and find out exactly what the rate was going to be. Comes to find out, the math adds up to about 9-10% of a premium that Aphria is going to pay. Again, not too shabby. It puts the new company in direct competition with Canopy Growth Corporation, which is the largest cannabis company by market capitalization. And the market has responded to the news in December by pushing both stocks up more than 250%. But that big move really didn't happen until February of this year, when all other cannabis stocks advanced on news of potential decriminalization legislation happening in the United States, which hasn't happened yet. It's only been talked about. It hasn't happened yet, so you have to be very cautious about how you take that news. Now, as you can see from the chart here, both stocks, as well as the broader cannabis market, have started to turn back a little bit from those big gains. I'm going to talk more about how that impacted our cannabis watch list here in a bit. Now, I think that maintaining a $685 million in revenue is a tough sell in the cannabis market. That's rough. But overall, I think the merger does make sense. On one hand, you have Aphria, which has a strong medical cannabis branding in Africa, Canada, Europe, South America, and other parts of the world. Medical cannabis sales contributed to about 13% of Aphria's total revenue in the fourth quarter of 2020. I think medical cannabis is where the pro forma company can really make more strides. Tilray's medical cannabis presence is in the European Union, and it's recently acquired a cultivation license for medical marijuana in Portugal. Now, the struggle here for this company is going to be here in the United States. Outside of having Sweetwater Brewery, these companies really have no assets in the U.S. A big part of that is likely because cannabis is still a Schedule I controlled substance here in the States, and both companies are kind of pumping the brakes and don't really want to pump in a bunch of money until that Schedule I status has been removed. However, there's very little exposure to the U.S. market, but Canopy, on the other hand, recently acquired Acreage Holdings, giving it solid footing in the United States. Now, additionally, there's the Reddit factor. I don't really like to get into Reddit a whole lot. I know there's probably a lot of you out there that look at Reddit, post on Reddit, and things like that. But it can't be denied what kind of trends can develop from Reddit. Both companies have been mentioned by Reddit users and subsequently bought up by retail investors, driving the price higher. So that's why you see Tilray and Afria's prices spike really, really high in February, whereas they remain relatively flat even immediately after the merger announcement. But the problem with that is it can lead to more volatility with these two stocks. So you need to exercise caution if you're considering making a move to buy into one or both of them. While I like the merger, I'm still not convinced that there's a short-term benefit. There's a lot of things that have to happen to make this deal really pay off for both companies and for shareholders. My biggest concern is the appearance of a lack of a plan for the United States. Basically, the pro forma company is putting the expansion into the United States into the hands of regulators, and that's kind of a dangerous proposition. So as of right now, I'm really neither a buy or a sell on either one of these companies. I'm pretty much standing neutral here, and that's one of the primary reasons why I didn't put either Tilray or Afria on the cannabis watch list on Money and Markets. They're both attractive, and their price spikes went up nicely. But again, if you remember that chart I showed you earlier, those price spikes have pared back, and they're still going down a little bit. So if you want a long-term momentum, you don't want a short-term trend whenever you're trying to buy high and sell higher. Unless you're a day trader, then that's a completely different story. Now, I want to talk about the performance of our cannabis watch list on Money and Markets. Before I get into our watch list, I still want to hear how your cannabis holdings are doing. Did you follow any of the recommendations on the watch list? If so, how are those doing for you? Email me at feedback@moneyandmarkets.com and tell me how your cannabis portfolio looks and what stocks you'd like me to examine in the future. Now, the entire cannabis market is seeing some pushback after stocks grew tremendously in the middle of February. We saw this with our watch list as well. We actually had our first triple-digit gainer in the middle of February because of that run-up. But of course, a lot of the gains were built on headlines that the federal government was inching ever closer to decriminalizing cannabis, but that hasn't happened yet. Again, just discussion. Until there's actually a bill on paper and it actually gets filed in either the House or the Senate, it's very hard to really take that news seriously. There can be all the talk you want, but until something is actually done, it doesn't really matter. And now some of you have asked when my next recommendation for the cannabis watch list will be coming up. And well, I held off in February because I could see this pressure on the cannabis market coming, and I didn't think it was really prudent to get into a new position when we don't really know yet if there's significant headwinds for cannabis stocks coming. So it's very difficult. You don't want to buy when it's really, really up and then watch it sag tremendously. Then you're looking at tremendous losses. So it's better to be prudent and better to wait until we see maybe some more longer-term momentum swing upwards of cannabis stocks before we put them on the watch list. Now, in terms of the watch list, we're still in a good place with the average gains of the portfolio at about 46%, a little more than that. Of course, we saw better a few weeks ago when that was as high as 58%, but we've also seen much lower in the 30 to 20% range. So we're right, we were still on the high side of where we've been with the overall portfolio. One company I'm going to focus on is Schweitzer Maudet International, traded on the New York Stock Exchange under SWM. The company reported its quarterly earnings last week, and we've been the beneficiaries. If you bought into the position, you've done very well. Sales jumped to $1 billion in 2020, which is massive considering the pandemic creating headwinds for just about every other company in terms of sales. That's up 5% from 2019. For the fourth quarter, sales hit $279.4 million. That's up 17% from the same quarter of the year prior. Officials also noted that operating cash flow was around $161.6 million, and free cash flow was around $128.3 million. Both of those are increases year over year. Last week, I reported a gain of Schweitzer Maudet stock of 48% since I recommended it in September of 2020. Now, that gain is at 58% thanks to a strong quarterly and yearly earnings report. The rest of the list is also holding up nicely. Planet 13 Holdings, the Nevada-based cannabis company, again, has started construction on its massive storefront in Orange County, California. The stock was down as much as 11% early on. It kind of had me worried just a bit, but now the stock is up 25% since I placed it on the watch list in January. Scott's Miracle-Gro, this was kind of the one that I was really worried about early on. It had dipped as low as 20%. But it had a blowout quarterly earnings report, and it's pushed the traditional fertilizer grower and producer up to 33% since I added it to the watch list in September. Grow Generation Corporation, this is a pure cannabis play. It's been our best performer over the last several weeks. The company's been on a buying spree. I talked about it last week. Just this week, it recently acquired San Diego Hydroponics and Organics, which is one of the largest suppliers of hydroponics in the San Diego metropolitan area. Grow Generation stock is now up 90%. Since I put it on the watch list in November. Turning Point Brands, another strong performer on our watch list. The company board recently raised the stock's dividend from about 5 cents to 0.055, so 5.5 cents. which doesn't seem like a whole lot, but it's still it's significant if you own a good number of shares. And if you're already in the position, you're going to be the beneficiary of that dividend. So that's good news. Turning Point has risen 62% since I put it on the watch list in October. And there's Perkin Elmer. This one has me concerned a bit as the stock price continues to fall. It's still up nearly 9% since it was placed on the watch list in September. But I think the recent pullback has given a good opportunity for those who are not already in the position, to buy shares now. I'll keep a watch on this stock and let you know if anything changes. Now, congratulations on your gains. If you followed the watch list, and if you did, I'd love to hear about it and let me know how you're doing. Email me at feedback@moneyandmarkets.com or leave a comment down below in our YouTube comments on our YouTube channel. Coming up this week, we're going to have much more. I'll have the Bull and the Bear podcast, both with myself and then our one on the weekend, where I'll bring in Adam and Charles as well. We'll give you 3 credible buys this week. You don't want to miss out on that. Don't forget the Money Markets Week Ahead on the weekend as well, so you can be prepared for what's coming up next week on Wall Street. Also, check out moneyandmarkets.com each and every day for new content that provides safe and profitable investment information for you. I'm Matt Clark, research analyst for Money and Markets, the host of the Bull and the Bear podcast, the Marijuana Market Update, and the Week Ahead. Wishing you all safe trading.